My friends, what is going on? Welcome back to the channel. Let's do a quick little Thursday update. Try to keep it relatively quick and clean. We'll look at futures real quick. Want to take a look at SPY, kind of my overall thesis for the market going forward. We'll take a look at Tesla and take a quick look at AMC as a follow-up to Tuesday's video. Before we get started, you guys know the deal. Nothing is financial advice. Everything is for informational and educational purposes only. I'm all about technical analysis and great setups in the market. I'm personally a technical trader. I think the technical setup shows you the news that is potentially going to be headed your way. And so I love charts and I love ideas that come along with it. And I love the potential money that you can make off a great setup. So that's what this channel, this page, on Twitter. If you haven't done so already, please follow me on Twitter, Colin_Glavin. But that is what it's all about. Also, shoot me a DM if you'd like to join my private Discord. Having said that, let's just kind of jump into it. All right. So I tweeted about this a little while ago. How this 31.75 level was going to be a bit of resistance. If we go back here to the daily, just kind of show you why it was a key level I was going to be looking for. So you can see right here where we wicked up and then got a push down. So this range right here was going to be resistance. And then once you finally broke through, then you were able to find support on it multiple times. 1, 2, 3, 4, 5, 6 days. So typically, what I always teach in my Discord is that, you always want to see support and resistance flip. So if it's, resistance on the way up, then you want it to see it act as support. And then once it broke through, now you're going to be looking for it as a potential resistance on the way back up. I also said, I'm not a huge a diamond pattern guy. So essentially what a diamond pattern is it's a potential reversal pattern where you'd be coming in here and kind of bouncing around the diamond, and then you either get a breakout or you potentially get a breakdown. Typically, this is looked at as a more bullish reversal pattern when it happens on the downtrend, and that's obviously what we've been in here lately. We've been in a big downtrend. From a data perspective, we have the PCE index in the morning, and we also have housing and retail sentiment at 10 once the market's actually open. So I'm Central Time, so 7:30 my time. PCE index is going to be released, going to get some big movement at that point in time, definitely some volatility, and then also potentially at 9 a.m. or 30 minutes after market open as far as the housing data goes. But you can see right here, this 4019 level, getting a lot of resistance here. Even currently right now on futures, pretty much where we stopped. We did wick above briefly, but I really kind of look at where are these candles closing, and then you can see right here we basically got a tweezer top right here on the hourly. So definitely going to watch to see how this pattern plays out. As far as the daily goes, did get a nice push up and hammer candle on the daily. You did get the 921 cross down, so a potential push up towards testing this long-term support trend that we had from the October all the way back in the October lows. So let me clean this up for you guys here a little bit. This is sometimes when I've got when I got all these trend lines going. For me, it's no problem because obviously I know how to do it, but I can understand for you as the viewer it not being just a great look. So in a perfect world, from a bearish thesis, what you would want to see is you would want to see a push back up towards this trend line in a failed test, and also too the volume profile matters. So what you really want to see is you'd want to see kind of a lower volume push back up towards this trend line, and you can see how this 921 cross down, how this 9 could essentially be pushing down right as say tomorrow we get a big push back up. That push up would be up here testing that trend line, and then that could be what could get you continuation down. So a small push up before continuation down, that's what you'd be looking for from a bearish standpoint. Now, once again, we always got to look everything from what's the bearish outlook and what's my bullish outlook. So I'm not you got to go full bear or you got to go full bull. I will typically always have a lean. Like it's like, hey, this is, to me, this is like a 60-40 bearish. It's just when you talk about the market, you have to speak in probabilities and not certainties. So for me, the reality is we have broken this uptrend, and a potential push up to retest before another push down is the most likely thing. If we go over here to SPY, and sorry, once again, let's clean this up a little bit here for you guys. So SPY, golly, sorry, got a lot going on. I apologize. But on SPY, overall macro view, which this is what I did the video on Tuesday. I was looking at this rising wedge right here, plus our big, ultimate, macro bear trend. And as of right now, which both yesterday and today, bulls stepped in big time where they needed to. And today was a much better and stronger response than yesterday was. So that would have been, if you're overall very bullish, that would have been a good sign. But this 50-day moving average right here has provided support both days. And where another level of confluence is right back in here from this December low. You can, let me make this, I'll thicken it up here so you guys can see what's going on. But it's pretty much a perfect touch right on the 0.5 retrace. And then that 0.5 to 0.618, that's the golden range. That's where you typically want to see bulls step in. So whether this is a momentary step in, this is absolutely what you wanted to see as far as a positive reaction. Now, is it a momentary push back up before a larger push down? From a volume standpoint, you definitely have an increase in volume. You got a hammer candle right here. So that's definitely the bullish case. So the bullish case is, okay, we closed back up within our uptrend. We've got increasing volume. We've got a hammer candle. We bounced off the 50. We bounced off the 0.5. Like that's good, right? Like that is what you would want to see from a bullish standpoint. Now, what are we looking at from a bearish standpoint? Well, it is still, we've had basically, I tweeted out earlier, it was like 18 days worth of gains wiped out in 5. So this was a strong move down. As the move has come down, your volume is increasing. You got a 921 cross down. It wasn't surprising here to see a bounce here. So really it's about, are we going to get another push back up towards the top of the wedge, back towards like the 418, 420. I believe I said this last time, but if I haven't, I'll make it clear now. If you do start to get another curl and you get another push back up here to around that range, and you see the volume decreasing the entire time while you're in this range, for me, you trade your plan, I don't care what you do with your money, that's going to be put city at that point in time. But if we get some good solid reactions here and the volume increases, so effort needs to meet result is going to be what I'm going to be looking for. If it's a strong push up, but but there's not strong volume coming with that push, then that's going to be big red flags to me. If you get a breakdown of this rising wedge, then your target, like a potential profit target, is going to be the 786, which I've said this a couple times on Twitter. So anywhere between 380, I do think if you get a move down here, we get some bad data, the Fed going back to 50-point hikes, anything along those lines, that would be a pretty strong move. I highly doubt that this 383 area would hold, but you'd probably see a momentary bounce. I've said multiple times, nothing is straight up or straight down in the market. So just like today, like we went straight down for a little bit, then we went straight up, and at the end of the day, we pretty much finished flat. So there's going to be bounces along the way, but if we come down here, I wouldn't anticipate too much of a bounce right here at 390, but once again, it's certainly possible. And then you'd really be watching the 383, but a target of a rising wedge breaking down is going to be the 786. So that would take you down to about 363, which is kind of retesting these October lows, which is what I've said all along. I think we would at least do that again, if not see another leg down. That is still my most likely with the information that I have today. Okay, now we start to, test right here, start to curl back up. We start to do this, and the volume comes right along with it. That's going to be a different story. I have personally started to add long positions in case I'm wrong. Okay, always leave room for the possibility that you could be wrong. We have all been wrong in the market. So I'm not going to let just my bearish bias overtake everything. I've already added some long positions, and I'm going to be selling, covered calls and puts, wheeling those bad boys, making that passive income the entire time. So that's kind of what I'm looking for overall on SPY. For Tesla, you can see right here is, to me, looks like it's in distribution mode. But that still means we could have one more weak volume push up higher. You've got the 200 simple moving average waiting right around here at 222, and then you also have the 618 at 233. So just like it made bank right here when we got the gravestone doji on high volume, I plan on shorting Tesla again big time and I'm a huge fan of Tesla, the long term, and Elon and everything along those lines. But for short term, this kind of 197, 198 range, you can see how, once again, support, then it acted as essentially double top resistance. Then you had the massive sell-off. Now you've broken through, and this range is now acting as support. So this rising wedge here, you got the breakdown, then you tested the previous uptrend, then you got pushed down again. Now it looks like you kind of want to test again potentially. So that's what I'm going to be looking for. Got to get above this 0.5. So basically we'll call it 208 is going to be crucial, and then pretty much about that 199 to about 197 or so. That is going to be what I'm looking for. Is if it breaks below that, especially you get below about 180, Tesla's going to go for a free fall. I personally am looking at this gap fill to potentially start entering long positions again. And that's going to be 154 to about 146. 9 out of 10 gaps fill. Now it can take time, for gaps to fill, but 9 out of 10 of them do fill at some point in time. And so I think that's a good spot for me to at least add some. And it looks like there's actually one down here at 113 as well. So I'm just overall, my bearish view is, I'm still bearish overall on the market. However, I'm not going to let that, for my long-term positions and, investing in index funds and everything along those lines, I don't think the market is seeing all-time highs. So for long-term stuff, which long-term stuff for me needs to be a minimum horizon of 5 years, preferably 10 years, and then don't be doing it on a bunch of debt, margin, anything like that. Just, and invest always what you can afford to lose. Last but not least, AMC. So we got a little bit above 650. I said on Tuesday that I had calls, full disclosure. On Wednesday, I exited all my calls at 100% gain. And once again, apologies, clear some of this up. So this is the look that I had intraday, tweeted about it. Essentially, the overall look was you were in this falling wedge right here, classic falling wedge. So you have the big volume push up, and then you have lower volume as you're dropping and consolidating, and then as you're starting to get the breakout, you can see the volume came along with it, and then freaking 650, right? It just we cannot get a good solid close and push up. I don't even think we've had an hourly close above it. No, we did. We've had one hourly close. So I usually like to look for at least minimum of hourly closes above it to really start to feel good about it. Obviously, the more macro it gets, 2 hour, 4 hour daily, the better it gets. So what I'm looking at right now is kind of just this current downtrend. Now, I've only really got 2 touch points here. We really like to usually have at least 3, but pushing up, if we can get above 685, Then the next real big test, if we can get above 650, so 650 still the biggest one. And then the next real big test is going to be at the 0.5 at that 725 with the 200 right above it. So 725 to 750. You really break through that with some solid volume, and that potentially could send it on a run up to 11. Now, typically, AMC likes to see, runs into earnings and big announcements. We've seen it time and time again with earnings, with the ape release, all that kind of stuff. So even if earnings is flat or, obviously great case scenario would be way better than expected, and outlook looking really good, then we might see a little run afterwards leading up to the vote that is supposed to happen or announced or whatever, March 14th. So, like I said, I've already given my thoughts on that. You can go check my Twitter page if you want to know how I feel about the vote. As far as the head and shoulders, we were talking about that as well. And, once again, from a pure pattern standpoint, the look to me is still valid. From a volume profile standpoint, so once again, you've got big volume push on the left shoulder, below average. On a right shoulder, you would have liked to have seen all this volume kind of stay down here. And you clearly have some stronger volume pushes. So I'm not overly concerned about the head and shoulder look right now. If you get a break below that $5 though, then, and especially if you see the volume start. So anytime we see, from a bullish standpoint, we want to see volume decreasing on any pullbacks. We want to see volume increasing on the push-ups. So that's overall what I'm going to be looking for. If this video was helpful to you, please like and subscribe, all that good stuff. Shoot me, questions on Twitter. If you have any questions, you can put them in the comment section as well. I always try to engage with you guys there. And other than that, most importantly, trade your plan. Don't do what anybody is telling you to do. Don't trust anybody who says they're texting with AA or anything along those lines. And they might be. We don't know for sure, but that's just, come on. That's wild, right? So just do what is best for you. Nobody on Twitter is going to be paying your bills. So do what's best for yourself, your family, and your portfolio. Otherwise, even if that's the exact opposite of everything I say do, if it's good for you, man, do your thing. Once again, a lot of data tomorrow, and then we'll see what happens rolling into March. Much love, my friends. Appreciate all of you. And I'll see you in the next video, hopefully on Tuesday. Have a good one.